Hello, everybody, and welcome to the Trading with Ashley show. I am so pumped up for this week for a lot of reasons. Now, I know most people take the weekends off, but in my community, we've been so excited about this upcoming challenge this week that we have been researching ticker symbols left and right. I've got a long list of incredible stocks to choose from for the $30,000 buy right challenge. So if you're in my community, we are gearing up for a wonderful week. The challenge starts on Thursday. And I have a lot of new members that joined for the challenge. So I'm looking forward to getting to know you better. And I'm looking forward to trading with you and teach you how to trade the buy right. So excited about that. Okay, for those of you that are not in my community, I still have something very exciting for you today. This video is going to be jam-packed with information. We're not only going to go over the economic events for the week, which is very important because that shapes the week. We're going to look at also the earnings this week. And there's one particular earnings that I have my eye on that I wanted to talk to you about. And I always give you a trade of the week, but I'm not just going to give you a trade for this week. I'm going to actually teach you how I am selecting the strike prices. And what I'm going to teach you is something that you can use for any stock, any point in time when you are ready to trade it. Because I am going to teach you how I calculate the expected move. This is a very important part of trading. If you can gauge the potential move of a stock with a big event like earnings, you can couple that with the premium that you're receiving and really get some wonderful returns. So we're going to be doing that today. I'm going to teach you how to do this, how to do the expected move. And this is a life skill that you can use throughout your trading journey. All right, let's go into the computer and let me show you everything we have going on this week. All right, here are all of the economic events that are happening this week. And like I said, I went ahead and graded them for you. So my eyes go initially to Tuesday, where we had the June CPI inflation. Now, this is going to be a very important metric. And so I want you to understand that when you're trading, it could have the market spike or it could pull down. So just be careful around Tuesday. We will get that information in the morning at 8:30 a.m. Eastern. All right, so key inflation indicator, this influences the Fed policy and market volatility. The market is super sensitive to this metric. Then the next thing that influences the market from an economic standpoint is Wednesday. We have June PPI inflation. Again, that is at 8:30 a.m. Eastern time. It does measure the wholesome inflation critical for the Fed rate expectations and the market reactions. So this data will be important as they continue to look at different data that we get to decide whether or not we will be getting a rate cut. So keep your eyes on this one. The other event that will be happening this week is on Thursday. It's retail sales, June retail sales to be exact. It again will happen at 8:30 a.m. Eastern. It does reflect the consumer spending trends, and this is a major driver of gross domestic product and market confidence. Now let's move on to earnings that are taking place this week. I have went ahead and pulled out the A premium opportunities, meaning the volatility should be high on each of these if you are going to decide to trade through earnings. And again, you want to be careful when you trade around earnings, and the information I'm going to show you after this will help you be a little bit more informed. But let's look at what we have. We have Monday, we have JP Morgan Chase, ticker symbol JPM. Now, it does have a lot of liquidity, which is good. This will have a significant market impact, and historical volatility around earnings does boost the premium opportunities. And so you want to watch stocks like SoFi, even though they're not directly related. SoFi could move on this information. Let's also look at Tuesday. We have ASML, and that's high volatility with the semiconductor sector. And the global market does influence, and it drives substantial premiums. Anytime you're dealing with something that's considered a NASDAQ stock, you will look at enhanced premiums. Most of the stocks that I trade for options are NASDAQ-driven stocks. Okay, now we have Bank of America on Tuesday. SoFi would more than likely be affected by this earnings report as well. Now, we'll get a little bit of insight after JP Morgan's to what Bank of America may do, because they all have similar results when we are looking at the banking sector based on the demand for their services. And then we do have on Tuesday, additionally, we have Goldman Sachs. So that's a big one to watch. On Wednesday, we have another one of those NASDAQ stocks, Taiwan Semiconductor, TSM. So this one you'll be able to look at a lot of premium opportunity around it. But then Thursday, we have a really big one. This is Netflix, ticker symbol NFLX. And the reason people like trading Netflix is it really is not as affected by any of the tariff news. And so that's helpful if you are wanting to get into Netflix. It's usually one that can withstand a variety of situations happening globally because of the dynamics of what they offer. And what I'm going to show you on Netflix will give you a potential trade setup that you can consider this week. For this next portion, I am going to teach you how I look at the expected move on a stock based on the price of the options that are trading at the money. So here's how this works. Now, right now, I am looking at July the 18th, and this will be the day after earnings, okay? So this is what I do. I go to the closest expiration date after earnings to look at the potential expected move because of earnings. So here we are sitting right at around that $1,245 mark. Well, if you look at the premium on the call side for $1,245, you are looking at $47.30 is the premium on that side. Then if we flip to the opposite, which is the put side, right now that is looking to be around $47. It does show $46.50, but if you notice that bid-ask spread is pretty wide, so I will just call it $47. Now here's the formula that we use. We take those two figures, the $47.30 plus the 47, and then we get a total. That total is $94.30. Then the way we get the expected move is we take that figure and we multiply that by 0.85. That figure comes to around $80. So now what we do to look at the expected move, we take $1,245, we add $80 to it to get the expected move up, which would be $1,325, and then we subtract $80 to get the potential expected move down. That would be $1,165. Now for a potential trade setup, what I'm going to do is I'm going to take this information with those strikes and I am going to go out a full month to put together this put credit spread. So why am I going out a month? Well, I need time for this to work in my favor. I need time for the volatility to die down. And if the stock does drop, because I'm going to be doing a put credit spread, I need time for it to rebound. And if I go just right after earnings, I'm just not leaving myself enough time for all of that to take place because I will be getting out of this trade early. So let's go and look at the option chain. Let's go ahead and look at August the 22nd. Now that's going to be about a month from now. And so that's a really good spot to look at opening up a trade. So armed with my new knowledge on the different prices, let's go down the option chain and take a look at 1165 as our starting point. All right, here it is right here. You see 1165. For selling this put, it would give you 3202. But one thing I want to check is my deltas. Now, this is a really aggressive delta for a put credit spread. For a put credit spread, you definitely don't want it to breach your strike price. So I'm going to go down a little bit further for a margin of safety. And I really like this one right here. This is the 1140 strike. The delta is a little bit better. It's 0.22. And also this one does have a little bit of option and open interest, which will help me in this trade. So what I'm going to do, I am going to sell this strike price 1140. And then for the other piece of the trade, the protective put, I am going to purchase right here, the one at 1130. So let me explain what happens with a put credit spread. You are agreeing to buy the stock if it dips down to 1140 by your expiration date. But the protective put right here, this 1130, it allows you, if you buy it, if you were put the shares, it does allow you to sell them for $1,130. So that limits your exposure when you're doing a put credit spread. And this is great because it allows you to trade a large stock like Netflix on a lot smaller budget. Let me send this to a ticket so I can show you the return. For this trade, we will be receiving $245. Now, it will require $1,000 to put on the trade, which is the distance between the sold put and the purchased put. What you're seeing down here, the $755, it's just taken into account that you are receiving a credit for this trade. So the potential risk is a little bit less than 1,000 because you are getting a nice credit to put on the trade. So let's talk about what kind of a return this is. This is an incredible return. So you're looking at about a 1 month trade, and the return is 24.5%. That's in 1 month. So that's why it is so lucrative, and you could actually get out of this trade early after the excitement dies down after earnings and maybe exit at 50%, which would still be an incredible return for a short amount of time. Now, for this trade to work out in your favor when we get to our expiration date, which is going to be August the 22nd, Netflix needs to be trading above the sold put. So that would be right here at 1140. It would have to be trading higher than this. That's why you would probably want to exit early, just so you're not vulnerable to market dynamics after all the excitement dies down after earnings. I hope all of you found that helpful and eye-opening, and now you truly have a skill that you can use to help make better trading decisions. This is going to give you a bit of an edge on the market, and that's all we need. We just need a little edge so that we can make better decisions. Now, I know I mentioned some bank earnings this week, and it could affect SoFi stock. So I did a video on SoFi. I am going to leave that video for you right here. Remember, if you're with me at Trading with Ashley, there is no trader left behind. All right, let's get ready for a monster week trading.